Hi, guys. Welcome to the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Scott Kitun of Songfinch, a site where you can hire musicians for a pretty low fee to write you a custom song, like for your mom's birthday. We discuss tips for selling your startup, how he uses podcasts to meet VCs, and much more. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions that investors are going to ask you. So this is really going to help you raise capital. To get instant access to this, click the link in the first comment. And while you're there, please leave us a nice comment. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Scott.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Scott Kitun of Songfinch and previously Technori. How's your day going?
So far, so good.
Excellent. I'm catching him right after having a call with an investor, so we'll talk about that a little bit. Eager to hear that. It's always fun to get people who are literally in the middle of fundraising and who just go from, talking to a VC, pitching, and then getting on the show. So it's really
Nathan,
fresh.
this is a live show for you. We kicked off our Series A for Songfinch on Monday. I don't know when this will air, but like this week, this was VC call like 8 of 15 on the week. So like I am in the thick, like you couldn't catch me at a better time to tell the story.
Right in the thick. I love it. Well, okay. Before we get there, let's go back a little bit because I wanted to talk about Technori and, maybe start with that. What was that? And talk about, raising money for that and then selling it. So
yeah,
a couple parts of that. Yeah.
Yeah. So, I mean, you know what, like, it's kind of funny. This is something that's now being talked a lot about. Alexis Ohanian is talking about this kind of stuff all the time now, where community is everything. Like they're even advising founders to build a community before you build a company, build a network around you. And part of it's about support and mentorship. And part of it's about access to opening doors and capital. And we definitely didn't do this thinking of that, but it ends up being kind of a fortuitous in a lot of ways. So, in Chicago, and to set the scene, Chicago, it's 2012, 2011, there's no 1871. And what is an 1871 is, kind of a small room of a couple people who managed to scrape some coins together to rent a room. There's no tech community. You're coming off the .com bust. There's traders, there's some angels, but they're not what you would call an angel today. And so we just saw there was an opportunity and really a need more than an opportunity. Technori in a lot of ways should have been a nonprofit, but it wasn't. Well, a lot of times it felt like it, but regardless, the idea was to build a community around tech. There was 4 major universities downtown Chicago, a ton of Fortune 500 to 1,000 companies, and yet still there was no infrastructure to do any of this. And so I decided there's like 19 co-founders of Technori. Pretty much anyone who was involved in the first few years of this, we call a co-founder because they all brought something that changed it forever. Seth Kravitz was the spearhead of this. And I came in later to kind of put my thumbprint on it. But the bottom line is we started by just building what was needed. So where's a place for founders to come and hang out and talk about tech and learn, how do you fill out an LLC on LegalZoom, just basic stuff. And then as you start to go, like you start to experience what every founder does, the ebbs and flows. And so we start building a blog, and then it was a podcast. And then ultimately I turned that into a live radio show where we're investing in companies using equity crowdfunding. And it's worn a lot of hats, but the reality was for the founders and also for the investors, but mostly the founders in the beginning, it was to give them a stage to be able to say, this is who I am. This is what I'm building. This is the opportunity. Would you like to invest in us? And we kind of made it mandatory at the end of the 5-minute pitch at our monthly events. It was like, this is my ask. And it's, I guess, kind of ironic that Technori was built as a sponsor driven. There was a little bit of angel money that came into the beginning of it, but it was never really like a venture backed business. By the time I got into this this is my full-time thing. It did have parts that had the ability to be a venture business. There was a real media component with real revenue and like we were growing and we were entering, became a digital era when it started. It wasn't really. So I had the same problem that I was trying to solve for all the founders that came on our show. And the founders are, massive. Matt Maloney from Grubhub, Spot Hero, Mark Lawrence, Steve Galanis from Cameo, like all these companies. But I didn't have like a massive network. I didn't come from, I had a network of founders, but they were all poor like me. So that wasn't going to help. So I didn't have like money to go to. And I absolutely hate, despite hosting a lot of events, I actually hate going to them. And it was not something that I wanted to do. So I created a podcast. And I honestly, it was called Tomorrow's Business Today before we turned it into Technori and it became what it was. And I don't think I ever intended on it getting a lot of plays, although it ended up getting a lot of plays. It was literally my cheat code for meeting the people I wanted to meet, whether it was strategic for partnerships in business or literally investors. And there's a funny article Robbie Abed wrote on Inc. about how I actually used the podcast to raise the first $1 million for Technori. And I invited on a handful of, I found quickly that I work a lot better with operator investors, people who literally have like built and sold fairly large businesses before they turn VC. And so I had like 4 or 5 folks on that I thought would fit my MO. And at the end of the show, literally, I was like, hey, this is an opportunity. Were you interested? And they were like, yeah, actually I am. And I have an interesting rapport. I don't know if it'll come out on this episode, but I have a way of kind of growing a relationship pretty quickly with people on the shows. And I became friends with those guys and raised the money, and, all of them got out ahead. So I feel good about it. But Technori, it kind of evolved over the next 5 years as like a very digital first way to connect with people and tell stories. And it started on stage and it ended up ultimately with COVID being completely digital because you couldn't get in person anymore. And so we took the opportunity to build a new newsletter called Pitch Reviews, which was basically me looking at all the companies raising money via crowdfunding and giving you my operator/angel investor perspective of it. And, 30,000 people subscribed and read it every week and invested $50 million collectively in all these different companies. And I got approached, obviously the podcast, Technori podcast, grew and we started getting a lot of national people on it. I got a kind of an out of the blue call from a guy I had previously talked to, Chris Lestrino, who started a company called Kingscrowd, which is effectively like Morningstar for private online investing. So anything Reg CF, AA+, so whether that's cards, startups, real estate, anything crowdfunded. And it just seemed like a natural fit. And so we worked out a deal where he would acquire Technori. We'd rebrand. We're in the process of doing this now, rebrand Kingscrowd Technori and add what Technori had, which is that media component, to his already existing data component. And what we now provide is, I mentioned the pitch reviews. What we now provide is literally a ratings and review system for every single startup that goes on, that is trading their shares publicly through, Reg CF, Reg A, Reg A+, Reg D, et cetera. So yeah, it's a good story.
Yeah, I see Kingscrowd. I feel like we may have talked to them a bit, or we've had some interaction.
There's no way you wouldn't have interacted with Chris. He's everywhere. Yeah,
it's good. Interesting. Well, okay. Well, I want to get to Songfinch, which is your new venture, but just to put a few pins in the whatever it's called for Technori. Actually, I want to touch on 2 things. You talked about using the podcast to kind of meet investors, which I think is interesting. Other than like kind of identifying investors, inviting them on your podcast, any other tactics you use there? I think that's an interesting way. And I've done a little bit with our own podcast, How I Raised It, which you're on, obviously, because investors, they're ego driven, right? They like to hear their own voice on the air, on stage, whatever it may be, like inviting them to events, inviting them on shows. They're much more receptive to that than just like pitching them constantly, which they get all day long. So I guess short version, any way you sort of help convert folks onto your show into writing a check?
Yeah. I mean, look, you got to go before COVID for a second. Cause like, I'm not sure if you're starting a podcast now, depending on who you are, if you've already got a big social following, maybe it'll be different. But, you got to go back to the days I'm recording these shows live in person at WGN Radio, right? So we're having like CEOs of companies that are booking a month ahead, and I'm saying like public company, like large CEOs, big time founders, Series C and D and et cetera, booking for coming into my studio like ahead of their trip to Chicago. So it's like built in. So like, this is
cool.
There's a whole spectacle, their ego is going to be like petted from the elevator door all the way to the top when they're handed a mug that says WGN Radio and the whole thing. So I had a huge advantage in that. And then I have a kind of a skill just naturally that I'm able to kind of deconstruct business models pretty quickly. And the shows go from fluffy conversation to very operator driven quickly. And I think it makes them put their guard down. Like they go away from the PR line and they start going into operator and they build respect pretty quickly. And now maybe more so than before, because I actually have a company that's doing well. That's not just my show media company. It's a real business. But I had a lot of tricks that were able to make me convert them quicker. Now I'm not 100% sure if a new person comes onto the scene with no following, if they're going to get the same thing with Zoom. But like the point I made at the beginning of the show with Alexis Ohanian's community thing, I think that you give anyone value up front for free and you don't turn around and try to ask them for something immediately. There's like a kind of, they're almost begging you to like, hey man, if there's anything I can do for you, I really appreciate you giving me an hour of your time to like babble to an audience, which, sometimes is 50, 60,000, sometimes it's 250,000, depends on the show. I think they feel a sense of owing you something. Mm-hmm. And if they trust you after the show, then I think it works well. And then there's one other little part here. And I think this is something you have for sure. And it's something I think I've grown over a decade is credibility. And so like when you have a show that is, the handles are verified on social and the guests previous to you are bigger than you are, it's like, okay, so this is kind of a badge. So I'm credible and they already think like I must know something that they don't know. And so we're kind of even footing, even if most of the time we definitely were not even footing.
Yeah. Interesting. That's good. Well, I think even if maybe in 2022, starting your own podcast as a way to meet investors, maybe that tactic doesn't work. Maybe it does, maybe it doesn't. But I mean, there's always different new platforms. I mean, thinking like a year ago or whatever, when Clubhouse was hot for a minute. I mean, there's always new platforms kind of popping up that you could potentially use the same tactics on, even if it's a different
100%. I mean, look, Twitter Spaces.
Right.
Think of the people who became really popular on Clubhouse that you never heard of in your life before. And then now they're on Twitter and they're doing really well. Before Clubhouse, they were zero on Twitter. Twitter Spaces let you do it. TikToks let you do it. You can get insta famous quickly, but you got to be able to capitalize and do something with it. And, I don't know if my personality and my like skill set would be good for me starting this today. But having had a decade of doing this, we're going to roll into Songfinch. I used like the first 5 investors I brought into Songfinch, I met through Technori, through the podcast 5, 6, 8 years ago. And I still today set up half of the VC calls for our Series A. I made the intro with them 6, 7 months ago by having them come on my podcast to talk about what markets they're looking to invest in and making predictions. And obviously most of them would be wrong because the market crashed. And so they all kind of look silly now, but it makes for a good intro for me to be like, hey, I know last time you were on the show, we talked about this. It's funny that what you said happened or didn't happen. And then you've got a like a line, a breadcrumb, from there to work with.
Yeah, that's good. All right. Last question about Technori, then we'll switch, but anything you can share about selling that startup? Are you able to disclose, was it a cash deal, stock deal? Yeah. If you can give an amount, that's great. Or, did you run a competitive process? Did you have other acquirers interested, or did you just kind of take what Kingscrowd was offering?
Yeah. I mean, I think it's a great question. There's nothing to hide on it. To be very, very blunt, the deal was something that I kind of concocted. The first conversation I had with Chris, it was sort of like, is there a partnership? Like you're doing pitch reviews. It's very successful as far as like the readership and engagement and notoriety, or at least on Twitter. Sometimes I forget if Twitter's real or if I'm not sure what real reality is anymore, which I think is a systemic problem, but whatever. I think you want to do a partnership and be like, look, we can provide you with all the ratings. It'll give you even more validity in your pitch reviews. I looked at what he was doing and I knew about it from years before. And I just thought to myself, I don't know if the market's there. And now all of a sudden, now obviously we're in a bad market right this minute, but like everything was leaning towards digital online investing and retail investors having the power to do things that they couldn't do before. I wanted to be in Kingscrowd, and he was raising a Series A, and he's still raising part of the Series A online on Republic. You can actually, like, anyone can invest in it. But I just said, hey man, I want to invest in this. I want not a small chunk. I want like a real piece, but I didn't have the liquidity because I'm all into Songfinch on everything else. And so I just said, what would you say about me literally selling you Technori, myself, my show? I'll be the front person of it. And let's call it a couple $1,000,000 and like put it in it at the same terms. And I'll let my entire audience invest in the deal right alongside of me, which, you know, almost $1.5 million, 1.2 million have. And so it was, there wasn't a lot of diligence. Mm-hmm. I knew what he was doing, and I didn't really care what he had done in the past with it, because I think the future is so huge in the online private market space. So like, it's not an acqui-hire. I don't work for them. I have my show and all that. And I'm certainly advising. But I've looked at this deal primarily as a way for me to get in to what I think is the future of investing for at least retail. And also, because of my experiences in raising capital in venture, I want to do it differently. And when we have a big exit at some point and I've got enough money to do it, which is certainly something I want to do, is and I'm not get rich, that too, but like, become an investor full time. I don't want to do it the way I've had to raise money so far. I want to do it different. And so there was a lot of reasons for me to jump into this Technori to Kingscrowd deal.
Got it. Okay. So just to summarize that, it sounds like, all right, you want to be part of Kingscrowd, or you want to, kind of merge, if you call it that.
Yeah.
Let's assign a value to Technori, fold it into Kingscrowd, and take the equivalent portion of equity as if you had invested in them. Is that basically how it worked?
Yeah. I mean, it's like I made an investment, but I used collateral.
Got it.
In lieu of cash.
Yeah, cool. Any last thing, it's kind of interesting right now as we're recording this, the startup market, venture market's kind of crashing, and who knows how that will play out. I'm starting to get several startups that are in my general category who quasi-competitive now approaching me to see if Founder Suite wants to acquire them. It's kind of this interesting place
where
people
bail
are
us
trying
out?
to find like shelter in the storm. It was interesting. So I guess here's a question for you. Any just other general advice if you have a startup that you're thinking about selling? Anything you would advise people on that to do?
I mean, if you're talking about first off, don't try to sell your business because there's a storm coming. Like, figure out whether it's cutting headcount or raising a little bit of money to give yourself a runway out of the storm. Batten the hatches down, focus more on profitability or focus more on sustainability versus growth. Don't panic sell unless you're literally looking at the business and know, like, this is not going to go well.
Yeah.
If I were going to sell, I would argue that what I did with Technori, whether it was intentional or not, I'm not even sure, is I started building towards who would acquire me. And it didn't cost my business anything. But look, if I decided to, we talked about everything, right? Podcast, founders, tech, investing, we do all this stuff. I picked crowdfunding, the niche of niches, to be the expert on and to talk exclusively about and build my whole newsletter around. The only people who are going to acquire me are going to be like Republic, WeFunder, Kingscrowd. There's like 7. And so I would just start focusing my attention on building one single asset that one of the people who could be your acquirer desperately need and would value your business in a fair way to acquire it, to get that asset.
Yeah, that's relevant. I guess the only thing I would maybe add is, hopefully that asset is valuable to more than just one of those people. So there's a bit of a competitive situation, right?
If you have that ability, that's why I say, you almost have to argue, if you can do that, you're almost making a mistake selling. Because if you've already got that opportunity for Technori, it was again, I don't think it was intentional, but maybe it was subconscious. But like, there was like a version where one person would value me at my most. And then there's another one who would value me fairly. And then a few others that would value me less, but maybe would be more fun. The one that valued me the most required our business, once they acquired us, to really change into something I didn't want it to ever be. So I kind of eliminated that, which pigeonholed me. Like, I can't really negotiate, at that point. I could just say, I'm not going to sell, I guess. So I totally agree with you. If you can, it's the same as raising capital, right? If you can get multiple competing term sheets, you win.
Yeah.
Or you should do better, at least, maybe not win.
All right. I want to keep on track. What is Songfinch?
Songfinch is a platform to create personalized, one-of-a-kind songs. Radio quality. This is like a high quality, high level song. You could post it on Spotify. In fact, our songs now have almost 500,000 plays on Spotify. We have an artist community of 1,100 artists and growing, 20 to 30 a week. And you literally go on our platform, select an artist, or we'll select one for you. You put in a couple of prompts about why you're buying it. Is it for yourself? Is it for someone else? Is it a podcast theme? What is it? And we pair you with an artist and create within 7 days this beautiful, beautiful song that we've now made over 100,000 of them. And, it's on the customer side, it's amazing because the barrier to entry to music goes to zero. You can make your own music. You can gift the most emotive way of communicating, which is music, to anyone for any reason. The more important part is the artist side. Previous to this, there's 11 million artists who've published to Spotify. Less than 1.5% of them have made $1,000 annually. So for us, we have 1,100 artists. The average income in a year is 25,000. 20% of them are going to make 50,000 this year. We've got artists doing 100,000 in revenue or in income. It's a genuine way to go from a barista part-time musician to a full-time musician in 90 days. And I think there's an opportunity to literally change the way music is made and paid in perpetuity.
That's interesting. I don't know if you're going to like this comparison or metaphor, but I'm thinking a little bit like how, you had Craigslist and multiple startups, even Airbnb and others, sort of made big businesses by taking a piece of Craigslist and turning it into its own site. I'm thinking a little bit like Fiverr, yep. Fiverr. You're almost taking a piece of Fiverr. I got a song for my wife years ago off Fiverr for like
yep.
$50 or something. You're sort of taking that and you're taking a piece of that and creating its own thing, right? Deconstructing Fiverr.
Let's put it this way. If Fiverr didn't exist, Cameo wouldn't exist. If Cameo didn't exist, we wouldn't exist.
Yeah.
And
right.
None of the three of our businesses are the same mechanically or financially in any way. We're like, just using Cameo as an example, and I love Steven to death, and I'm not in any way being disrespectful to the platform because we wouldn't be here without him. One of the challenges that they have is that the supply is the demand. You're going on Cameo for a Brian Baumgartner. Hey, buddy, how are you? Office guy here. And we are unique in that. So I guess with that, it's top down. So if the top 2% don't resonate, you don't sell. That's the end of the game. For us, we're bottom up, which is to say the demand is for the output. We have hundreds of thousands of people coming onto our website for the sole purpose is I want to make an awesome song for myself or for somebody else. And I don't care who the artist is. It's our job to make the right artist, make the right song and deliver this amazing product to them and then be happy about it. So the difference between us, like to Fiverr in that case, is that like these artists could certainly go on Fiverr and do one and two strip jingles for $50 or $100, but they would probably not have the volume of making $25,000, $50,000, $60,000 a year on it. And they probably wouldn't have the infrastructure, with fulfillment and customer service. And, our entire business model is built around making sure that you get this song in 7 days and you're absolutely enamored with it for your life.
Yeah. Interesting. I see you have songs for dad and wedding. What's your biggest category of songs?
So the biggest standout category is actually just because there's no, like, it's like, I'm feeling down. We had a guy just buy him and his 10 buddies put in to buy 10 songs to make an album to do a road trip from LA to Vegas for their bachelor party. There's a million things. We're doing songs for soldiers. There's just so many things. On the holiday front, we definitely get spikes. So like to us, Valentine's Day / anniversary / proposal is probably our Super Bowl. Christmas is like that kind of secondary Super Bowl, which is really just because it's just the occurrence of Christmas is why you would buy something for someone. And then of course, wedding anniversaries, birthdays, weddings themselves, memorials, all this kind of stuff. But
yeah,
we've definitely this year, we've bucked the trend on it being occasion-based gifting. It's really starting to move into like it's a song, like what you do with it is irrelevant. We did 1.5 million in 20, 5.6 in 21, and we'll do 35 or something like that this year. So, I mean, it's
revenue.
Yeah.
Yeah. That's great. Off. That's amazing. Are you starting to get into like commercial work? Like if I want to have a song for my commercial. Yeah.
We just made our first couple of hires to support it. My co-founders, John and Josh and Rob, their entire history was in brand. They sold their first business music dealers to Coca-Cola. So it was like custom songs for brands. So we just opened it up. We have some stuff with Home Chef, US Army, Cheerios, Tullamore. I think it's going to be a big business for us, but the reality is like all the investors love to hear the B2B thing because it makes them feel safe and warm. But the B2C is going to be literally $100 and something million revenue business next year.
On the artist side, are they able to reuse their sort of musical components? In other words, can I have a song for a birthday and I'm basically reselling that same song, but swapping in Scott's name and then Jennifer's name and then Sean's name?
Yeah, no. So like everything is from the ground up. It's from scratch. We've had a few that have happened like that. We scratch them and redo songs. They may reuse a melody here and there. We have like I said, we have an artist fulfillment side of this where we really check for this. Literally, like we have people, we're moving towards computers doing it, but like a lot of it is people listening to every song. So if you were to continually doing that, you wouldn't be on the platform very long. But for the most part, like they're allowed to reuse a little bit of foundation, but every single lyric is from scratch. Every hook in the song is from scratch and so forth.
And the person purchasing it owns the rights and everything.
So they have a perpetual use license. We are pro artists, so our artists own the rights to all of their music. We don't own it. We as a company have the rights to monetize it however we want. We don't need to go through them to do it, which is how we get into B2B and things like that. You as the customer can do anything you want with it. You just can't monetize it. You can't use it and go on streaming rights on YouTube. However, we are launching a product at the end of this year that will let you do that. It just gives you more of a commercial use license, which is a result of us seeing this growing demand from the creator side of our business, which is people who are musically inclined, but let's just say not very good. And they kind of want to be a P. Diddy and say, hey, I'm going to make my own 3-song LP and drop it on Spotify and make money. We're going to give them the rights to do that.
I don't want to go too deep into the weeds, but if I'm maybe a great singer, but I'm a terrible songwriter, is that a use case where I could actually have people write me songs?
You know what? My co-founder, John, would, or I'm not sure which of the three of them would beat me up first, but I think there is an opportunity for this. They have staunchly played this role of like, we are what we are. If that's your thing, go find someone else. I actually do think that there's going to be a place where we have a $99 product and it's just doesn't include the singing of it. There's no talent fee. It's literally like a $50 writer's fee. I think that's a product we should absolutely offer. I think the only thing that needs to happen first is I think the demand side of like, once the demand side of creator goes probably above 20%, you start to see more variable in use. I think that will be a product and I would certainly back it. I'm not sure if the rest of my team would, but I'd back it.
It's probably maybe a little tangential, but anyway. Okay. So it sounds like
a good product.
On track to do 35 million this year, up from 5.5 or so last year. That's impressive. That sounds very fundable. So let's talk about raising capital for this. How much have you guys raised?
So we've raised in total as a company just less than 5 million. The investors are very strategic and well-known. Sam Yegan from Corazon Capital here in Chicago led the Series C that we did. Other than that, it's like The Weeknd, Doja Cat, Quincy Jones, Atlantic Records CEO, Craig Coleman, David Colt, Pat Vitalik, Michael Kaiser. Like there's like a bunch of, everyone is strategic. And what we would need as a business in a thing that's disrupting music like this. You have to have the doors open before you get there. We don't have time to bang them open. So we've got some pretty great investors. We're just opening up this Series A. I think this is an important differentiator because you're talking about this conversation in the midst of the VC market kind of tumbling. We have spent about $3 million of the, call it 4.8 that we raised. And in doing that 3 million, we created a new vertical. We grew the business 1,600%. We're pacing run rate of 30 something million dollars last 12 months. And I think we're super capital efficient. And I think that's the reason that our conversations with these VCs that previously probably told a lot of people who they had said, yes, let's talk next week, that they're not a good time for my team is what they're probably emailing them. We seem to get through the cracks because our cap table is loaded with people who have a lot of respect within the industry and because we're very capital efficient.
Let's okay. I want to get to current fundraising because I think it's an interesting time, interesting situation, but I actually want to just quickly go back to that first round and touch on that a little bit. How did you put together, this list of Doja Cat and some of these other, I guess, strategic musicians and things like that? Like, talk about putting that round together.
Yeah. Well, one of my co-founders, Josh Kaplan, is a variety hit maker now. He's Doja Cat's manager. He discovered her. He also manages Tyga. So he's an access point to the music industry for us. So that was Doja Cat. The Weeknd came that way. I actually got to Craig Coleman, the CEO of Atlantic Records, through the Technori network. Harry Gottlieb, who founded Jellyvision, as an investor as well. So, I mean, the vast majority of the first bucks that we raised in our pre-seed and seed round came through me having Technori network and through Josh and music. And then there's a funny story that I won't get into because it's not my own story, but my co-founder and CEO of the company, John Williamson, who's been in music for 23 years, got a random call from somebody who represented Quincy Jones and said that he read the article in Rolling Stone about us and knew that our round was closed, but will we have room for Quincy? Shit, yeah, I would have room for Quincy. So he became an investor.
Funny. Yeah. How old is he? He's
got to be almost 90 years old. And he is completely still with it and like on it and in studios. And like, he's got some health issues, but we made one request that was like, if you're going to do this deal late, I want you to sign the contract with your real paper and pen signature. And I want some sort of note from him. And he filled out this Michael Jackson Thriller album, and he wrote this beautiful note to me, and I have it framed in my office, not this office, another one. But yeah, so
that's cool.
We were very strategic that way. And then obviously operators, David Colt was a person who pitched on Technori, was a keynote. Pat Vitale from Home Chef, again, same thing. Tom Gimbel, I met through Technori, interviewing him before I even was in Technori, So that's that community element before you start doing business.
So is this a party round, so to speak, like 100K, 50, 100K from quite a few people or what?
No, there's probably 12 people total. We had, I would say the average check size was like 200. The pre-seed was all those people for the first check was about, I think we raised 1.5 or 1.6 million. And it was all check sizes 1 to 150. We didn't bring in any new investors in the second round other than Corazon. So everyone just re-upped, and then Corazon put on a couple $1 million and topped it off.
When you have someone like The Weeknd as an investor, can you lean on them for anything? Do they talk you up, or is it more a great name to have on the
it depends on your relationship. I've had a couple of these where it's not so great, and they like immediately are suspicious, like they want a marketing fee and all this other stuff. I think, people are different, right? So like, I don't want to generalize and say one thing over another. What I would tell you as a founder is if you have an opportunity to get someone, whether it's tech or entertainment, to be a quote unquote figurehead in your cap table, if they're not willing to put actual capital in, I'm not interested in you being a part of this. So like, did we give those guys a couple of advisor shares? 100% we did. And for that's our rights to say you're an investor, but also like they plug and open doors for us. And they have, but the reality is like, they wouldn't if they didn't really care about your business, they'd take your free shares, but they certainly wouldn't put their own money in it.
Yeah, that's good. Okay, let's talk about the current round. I want to keep it on the clock.
Yep.
You know, as we're recording this, it's end of May 2020. End of May 2022. The venture market is tanking like it was in May 2020.
Not so frothy.
Yeah. And, you know, the air is kind of deflating from the startup bubble. So you're out there in the field hunting. Is this your Series A, proper Series A? Yep. And give us the lay of the land. What's the appetite? Are people taking meetings but delaying things? You know, what's going on?
Yeah, I mean, listen, I've gotten the emails from Craft Ventures, did the whole big talk on it. Sequoia did a whole thing. You know, Adam Alton sent out a whole thing for Y Combinator. We haven't seen it yet. I mean, we opened this thing up on Monday. We started the conversations with a couple of VCs about 3 weeks ago before we hit a deck and kind of set the schedule. I'm 15 for 15. We've got almost a third of this round already covered. And, you know, I don't think we've had a problem. Now, will we have a problem when we get to the lead and we start talking about the valuation? That's the big question. We've not raised with absurd valuations, despite the crazy. We probably should have, but I mean, actually, I don't advise that, but I'm just kind of joking.
Yeah.
Because of how capital efficient we are and because of what we're doing and how much we're raising and our long-term plan, like our goal is to get 24 months out, kind of duck this whole whatever it is and focus on building the business and come out of here with a, you know, $225 million 12-month run rate when we look back. And so I think when you tell that story to investors, they feel a little safer, you know, like they're looking at this like, oh, okay, so you're not going to keep doing what was going on over here. You're going to be incredibly capital efficient because of what your plan is. So we have not had that. I'm sure we will take a 10 to 20%. I'm just being hopeful haircut on the valuation that we came in expecting before everything hit the fan. But again, I don't think our multiplier that we're asking for is terribly high.
Yeah. I'm going to ask a personal question. You can opt to not answer this if you choose. Do you have to raise money? You know, you've got a pretty healthy revenue run rate. Like, are you in the category where you could keep this going and growing without funding, or is it sort of required that you need to raise money in the next 6 months yeah, I mean, look, we have runway through the year financially. I think if we wanted to lighten the team, we could probably just like do well and be a nice business. We're first purchase profitable. Like it's doable. I don't think that we want to slowly let the whole industry be like, oh, here comes there's an asteroid coming, and just like give them time. Like I want to be right on their doorstep before they even know what hits them. But that doesn't mean grow recklessly. So what I would say is, could it be done? Yes. Would it have the same outcome? I'm not sure. One of the reasons, probably the foremost reason we're raising, because we don't actually need any money for marketing. Like we don't spend money on marketing. It just gets refunneled right back in. Like I said, it's net profitable on the first purchase. We need tech because there are potential bottlenecks that this business has that we're using humans to basically simulate outcome. Yep. Listening to all the songs and stuff like that.
Yeah, just stuff like that. And like there's tools, like we're disrupting a business. So like when we offer streaming, so you can have your song delivered via streaming. All the firms we used to stream to Spotify were like, oh yeah, this will be great. And then we burnt them up because we were streaming so many songs that they couldn't handle it. So we need to build our own tech. We're working on partnerships, but you want to own what you have. And so for us, we need to hire, $5 to $8 million worth of devs over the next, 12 months. And in turn, we'll flip the switch where we don't have to hire so many human beings on the other side. So to build a healthy, profitable business that's also a monster, I think we need to raise money.
Yeah, that makes sense. Got it. You're still hunting for the lead round, the lead investor in this round. I know you have a third of it committed or soft circled so far.
Yep.
Talk about
so
that.
the lead is all that's missing, which is a big missing, right? All that's missing is the lead. We have I would say 4 or 5 candidates already that we've talked to that I think would be a dream candidate for us. And I hope that they think we'd be a dream investment for them. We'll see. We'll see over the next few weeks. That's probably a little harder than it would have been a couple months ago. I think anyone who used to enter the mix because of competition or because they didn't want to lose out to a rival VC or like all that stuff has gone to the wayside right now. And, to be quite honest with you, like what's hurt us the most is you see like Cameo do a riff and you see all these groups in a creator economy drop out and firms that made really not great investments, as it turns out. It makes us have to like, where we would have come in and said, look, you love this market. These guys are killing it. Our numbers are actually better than theirs. So like, you should love us. Now it's like, we have to be defensive. No. Our numbers are great. But like the reason that it's different, like we had to add all these slides to our deck to defend yourself, which is just not a great place to start. So, answering in short, I guess, or long version of short, I think the right lead is out there. And I think this is not just me talking. This is for everyone listening to this. I think founders need to get a little bit more. You get the conviction line from VCs a lot. I think it's time for founders to kind of take that line and make it their own. I have a lot of conviction in VCs that are in this for a long haul, making a long bet on disruption or transformation, not on paper raises and moving on something that happens to be a fad. And, maybe you think the fad is going to become forever and that's a different bet. But there's a lot of bets that have taken place on a lot of companies that I think anyone with common sense would have said the long-term value of that's probably not very durable. And I think founders now feel like it's okay for VCs to just be like, let me rip your company apart, but they don't rip the VC apart. Mm-hmm. And I'm not saying be disrespectful ever on both sides, but I think like founders should be more assertive and say like, look, my conviction is that I want a VC that invests in companies similar to this, that have durability like we think we are and are chasing the North Star, not North Street. And you know what I mean? And cut the call off if you feel like it's not a fit.
Well, and part of the reason I was asking if you guys had to, needed to raise money or didn't, right? Because that, if you don't, that always gives
that's the best
startup, not necessarily you, but any startup.
Yeah.
If you absolutely don't need to raise money, you want to raise money to grow faster, do some more tech stuff, then you have a great position, right? You don't need the investor. That's a kind of a nice position to be in.
I mean, that's your goal. I would hope that if you didn't need the money, you wouldn't choose to take it in now. You should have done that before or afterward.
Yeah. Interesting. Are you targeting mostly investors in music, tech, or like what's your sort of focus?
Yeah. Mm-hmm. I would say music is kind of not real, like strategic investors, like maybe a Sony or something like that. I'm not saying that they're involved in this in any way, but like someone like that, I could see them coming in, but you've got to kind of be careful with, you don't want to limit your outcomes. And this is now we're talking about a big enough sum of money where there are going to be preferences and limitations and things. So probably not music that much. Those that have invested in previous companies that are disrupting music, yes. Marketplace, creator economy, probably are the most prevalent. And then we're looking, conversations in Silicon Valley, conversations in New York. Austin seems to be coming around. Weirdly, I haven't stumbled on too many of the Miami folks yet. But I think most of Miami is kind of hot on fintech at this point. So maybe that's why, but yeah, I mean, I think we're open to it. I don't need a huge name VC. I just think that where it comes in handy when you're trying to disrupt an industry as huge and powerful as music or anything in that kind of, fintech would be another one, energy. You kind of need big guns. And I think it takes, sometimes it takes having a more notable VC that can go to bat for you. But otherwise, I think it's just money. Like we probably don't need a lead for this, but I think it says something if you have the right one.
How many investors are in your pipeline? How many are you targeting? And I guess also corollary is with this sort of market downturn that we're experiencing, do you need to increase the size of your investor funnel?
That's a great question. I'm going to give a bad answer and then you're going to give a good answer. The bad answer is
leading the witness. No.
Yeah, no. Well, really, the right answer is yes. Obviously, in any sales market, if you have a bunch of customers that are kind of looky-loos now, you're going to want to have a bigger funnel. I personally am, and I do not advise this for 99.9% of people. I rely a lot on personal relationships in my network, and I built a network with people who I know that I'm not bullshitting them, and I expect the same in return. So we had a list of, let's call it 1,500 investors across the country and some international that I could find. I had about 125 that I knew I could absolutely get a call with. And then I had like 35 that I thought could get a call. They would definitely be interested. They've done deals like this before. And I kind of circled like maybe 5 to 10 that I thought would be a stretch, like whether it's market conditions or just whatever. And I just made it, whether it was me requesting the intro or using our partner Sam Yegan to make those intros, or other people that were invested in by these guys. I use the network very strongly and work through it. The downside of this is that if I come up short, you particularly will know why. Wasn't enough of a funnel.
Yeah, that's interesting. I mean, it's not like a cure-all, but it's a easy, obvious advice sometimes for founders. Like, hey, if you're not getting the hit rate that you want, conversion rate, or if investors are just pulling back a little bit, what's one thing you can do? You can change your story. You can increase the size of your funnel, right? Just kiss more frogs, talk to more people.
Yeah. And we did that. Like, that's the thing that I think is the biggest challenge. I was greedy. Like the 35 I'm talking about, we're talking like from A16 down to number 36 on the Midas list. Like, it's the top of the top.
Yeah.
Is there a list of people out there that maybe are not as strategic, but have cash? Sure. And we'd take it. But you start with your best shot and then you work your way down. And I do think my route is a little riskier. I would not advise it unless you felt like if we didn't have runway through the rest of the year, if this was like you got 3 months, I think I probably would take a different approach.
Got it. I want to let you off the hook here in just another minute or two, but multiple choice question. You just got off a call with an investor. If you want to talk about how that went, any insights from that or little anecdotes, or just any other general advice that you'd like to give to founders, raising capital, music tech, stuff like that. Anything we haven't covered that you'd like to cover. So
yeah, I'll give you a 1A. The call, I've been on many of these before. I think it ended favorably in a way where we'd run into each other again and be friendly and I'd happily intro deals to him. There is this thing where you have achieved a certain amount of success and people give you too many claps on the back and you think that like you can just disrupt the founder's flow and just be like, I don't give a shit. I'm going to ask you what I want to ask you, how I want to ask you. And I think that founders feel that they owe them something. And I just this is like the A part. I just want to remind everyone listening to this show, always be respectful. First off, this is not about being disrespectful to anybody. Always remember that in order for the fund to exist, you have to exist. They're giving you their money and they like to remind you that, but they're using your performance to raise more money and they're collecting that money in the form of carry and fees. And that's how they make a living. And so every time a founder is on a call where it's felt like you're wasting their time and they make you feel small because of it, remind yourself that they're on the call the same reason you are. They need returns. So I think that's something that gets lost here. This dynamic has shifted. And this is why I got involved with the Kingscrowd thing. I want to shift this dynamic back to where it's equal. There's no superior person here. Be respectful. Don't waste people's time. But at the same time, like, I need you. I need your money. You need me. You need me to make you money.
That's true. Yeah, I think that's healthy. Thinking of it as a mutual two-way street. You need each other. Investors need startups, right? Yeah, it's not just because it often feels when you're raising money that you're begging.
What do they call it, right?
From people, right?
What's your ask?
Yeah.
Like the power dynamic is screwed up from the start. The deck is like, that's the VC at the end of the call. What's your ask? What is my ask? What's your ask? Like, yeah. Let's make a deal here. I'm not offering you. You're not offering me. Like, we can differentiate I think this is something we can learn from. Founders can differentiate. The joke on VC Twitter is added value. Investors can differentiate with really, truly adding value, making connections, not investing in you, but entering you to other funds that might or find it valuable or give you real feedback. Founders can do the same by giving them feedback and introducing them to other founders doing deals that maybe are a better fit. Like if the initial transaction is more mutually beneficial, then I think we can have a better way of doing this. It just gets, like anything in the world, it gets clouded because you're talking in a lot of cases about someone who represents billions of dollars. And at the time you're asking for money, you have, nothing.
Yeah, exactly. One of the things I always tell our customers when I do our funding hacks talk is at the end of your pitch, you just pitch them for 30 minutes, 45 minutes, whatever. Turn it back on them. Make them actually pitch you why you should let them into your deal, right? Like make them pitch you.
For sure.
They don't want to do
sometimes
that.
I'd almost say do it first. You first. Why am I here?
Yeah, exactly. Good. All right. Well, Scott, thank you very much. If people want to hire a song for their mom's birthday or whatever the occasion, or even just for their own personal use, songfinch.com, right?
Yep. Songfinch.com. It's as easy as that. It'll take you 10 minutes.
What's it start at? What are the prices?
$199 is the song. A whole bunch of add-ons that people will buy and go forward from there.
Cool. Songfinch.com. Check it out. I like it. I love this idea. And I actually love the commercial idea too, because I'm thinking about, as we're getting more and more active on YouTube and stuff, like we should create some cool background music. I mean, I can think of all kinds of use cases.
Oh yeah. There's so many ways to use it. And like so few of them are similar. It's crazy. Music is just such a weird thing. You think about it. Like how many songs have there been written in all this time? And yet there's really not that many duplicates. Movies, it's remakes every year. Music, it's not. It's different all the time.
Yeah. Cool. Excellent. Thank you, sir. Appreciate it. Songfinch.com, Scott Kitun, and good luck with the round. We'll catch you after you finish this round and hear how it's going. Okay.
Thank you, sir. Appreciate it.
Over and out. Bye.